Hi, folks. Trisha Curtis, CEO of Petroners and host of the Petroners podcast. I'm in beautiful Northwest Colorado. Today is Friday, June 13th, 2025. We are seeing oil prices close today on Friday above $73 a barrel, and that is for one main reason, and that is because we saw attacks from Israel on Iran last night. Now, everyone's calling these preemptive attacks, but if you've been following Iran, you've been following the market, we've had a slow sort of melt up in oil prices over this past week. Now, part of that was driven by optimism on a trade deal between the U.S. and China from the meeting that took place in London this week between the U.S. and China. But really, what we've heard and seen is that the Trump administration talking about getting a nuclear deal with Iran, and clearly this is not sitting well with Israel. And what you've also seen is that Iran continues to enrich their uranium. So just Google this, look on Bloomberg, you will see these charts of the uranium enrichment that Iran has. So Iran has a goal to enrich uranium, to make a nuclear weapon, and their goal is to get rid of Israel. So Israel's, we call this a preemptive strike, but Israel went ahead and attacked nuclear scientists. They took out some of their nuclear scientists' leadership. They went after the Revolutionary Guard. They took out military leadership. All this took place last night. Last night we actually saw WTI around $75 a barrel. You saw the WTI Brent spread really narrow last night. And so when we talk about tensions and geopolitical risk, this is not just geopolitical risk. This is the stuff that I've been talking about for years. This is the stuff Jamie Dimon mentions. This is the geopolitical hotspot that an evolving calculus turns into an actual conflict. So you have the ongoing war in Ukraine. We know that we're going to have to sanction Russia because that war is not ending. But really, we've talked about at the beginning of this Trump administration enforcing the sanctions we have on Iran for this crude, which hasn't been done. So now what's happening is that crude is skyrocketing, or skyrocketing is an overstatement. Crude prices are increasing because, firstly, they were oversold. So we had, everybody pressing the sell button on recession worries over the several weeks, a few weeks ago, basically after April 2nd, and tariff concerns. And you continue to see when OPEC would meet and the Saudis would say we're increasing output, you continue to see oil prices get sold. Clearly, the Saudis thought that we were going to have to sanction Iran, or knew that things like this, they obviously live in the Middle East. So the tensions with Iran were only increasing because Iran is continuing to enrich their uranium. They want a nuclear weapon. So I don't think the Trump administration is going to be able to cut a deal with Iran. The hardliners in Iran do not want to cut a deal. They want a nuclear weapon. And so Iran has already retaliated on Israel. Now, there's some speculation that, and this is all moving, so we're going to get a lot more facts as they come out, but according to the Institute for Study of War, the reason that Iran did not immediately retaliate was because they did hit some of Iran's missile defense systems, or some of their missile defense capacity. So these attacks, they didn't wipe out, obviously, their entire nuclear capacity, but they did go after the Revolutionary Guard, they did go after military leadership, and they did go after nuclear scientists, and they are looking, and supposedly today, Israel also attacked the underground uranium facilities. So what we're hearing and what we've been hearing for days from Iran is that they have secret uranium enrichment facilities. And so all of this is stuff that has really concerned Israel. So all of this is what is pressuring oil prices upward. Now to the economy, and the reason I'm making this video a little longer is the impacts to the U.S. economy and to the global economy are significant. We are seeing airline stocks down, we are seeing hotel stocks down, and travel stocks down, and that is because what you heard this week was a lot of really good data points of sort of the economy being held up. And part of it's being held up is because we've had low oil prices. $60 oil is meaningful to an economy that's in recession or going into recession or coming out of recession. $60 oil is really it's like a stimulus, a little mini tax cut or stimulus to the consumer, especially those consumers living paycheck to paycheck. So now with a tick up in oil prices, you're actually seeing concern that we are going to have renewed inflation because, oil has done the heavy lifting for inflation with oil prices coming down. So this is not bad for oil production. It's not bad for U.S. producers, obviously. Absolutely, if folks are thinking about hedging, this is a great opportunity to hedge because we had this slow melt up in oil prices, and then we have this actual conflict between Israel and Iran escalating. And yes, we can see higher prices. Certainly, Saudis can bring barrels back. We have plenty of spare capacity, but a tick up in oil prices or a spike in oil prices could be the thing that breaks the straw of the camel's back in the U.S. economy, in the global economy, not dissimilar to what we actually saw in 2008. So with that, folks, thank you so much for listening. I'll talk to you soon. The latest Petroners podcast on tariffs, China, and oil prices, that has dropped this week. That is episode 133. I recorded an awesome podcast with Mike Howard from Howard Energy Partners. This is a phenomenal podcast. I recorded it in Newcastle, Wyoming this week. There's a lot more in the queue, so stay stay tuned, folks. I will keep you up to speed on what's happening around the world, especially with geopolitics, especially with Iran. And do not forget that China is the one buying this crude oil from Iran. 3.5 million barrels a day that Iran produces, over 2 million barrels a day is being purchased directly by China. So talk to you soon, folks. Bye.